Welcome back to the deep dive. Wow, you guys really went all out giving us material for this deep dive, huh? Articles, research papers, even some YouTube clips. Lots to dig into here about the US dollar, inflation, the election.
It's a pretty hefty sack, for
Um,
sure. And yeah, it does seem like there's a lot going on in the world of finance and economics these days. Definitely enough to keep us busy for a while.
well, let's not waste any time then. Let's just jump right in. I guess the first thing that jumped out at me from all this material is this phrase dollar-centric system. What does that even mean?
Yeah, the dollar-centric system. Well, basically, it refers to the U.S. dollar's role as the world's primary reserve currency.
The primary reserve currency.
Exactly. It's been this way since the early 1970s. Essentially, it means that most international trade and finance is conducted in U.S. dollars. Countries all over the world hold large reserves of dollars. And commodities like oil, for instance, are typically priced in dollars.
So it's like the US dollar is king of the global financial jungle or something.
I guess you could say that, yeah. But like any king, its position might not be as secure as it once was.
Oh, what makes you say that?
Well, one of the key sources you guys sent over, Luke Gromen, he makes a pretty compelling case that this dollar-centric system is inherently unstable because of something called Trison's dilemma.
Triffin's dilemma
Yeah,
sounds kind of scary.
yeah, it's a pretty fascinating theory, actually. Basically, it argues that the country that issues the reserve currency in this case, the U.S. faces a kind of fundamental conflict of interest.
A conflict of interest. How so?
Well, to keep that global demand strong for its currency, the U.S. has to run what's called a current account deficit, meaning it spends more money abroad than it earns from abroad.
Okay.
And what this does is it essentially forces the U.S. to send dollars and jobs overseas and then buy back goods and services with those dollars, which then flow back into U.S. financial markets.
I think I'm following. So what's the conflict? Where's the dilemma part come in?
The problem is, as the U.S. runs these deficits year after year, its debt grows larger and larger. And what Triffin's dilemma says is that eventually, this huge and growing debt undermines confidence in the dollar itself.
So it's like if you're constantly borrowing money from your friends but never seem to pay them back, at some point they're going to start wondering if you're ever going to be able to pay them back, right?
Exactly. And that erodes trust, makes people hesitant to keep lending you money. And that's where the potential instability comes in when it comes to the dollar being this global reserve currency.
So are there signs that this is actually happening with the US dollar? I mean, is it actually losing its king of the jungle status?
Well, there are definitely some interesting developments that suggest things might be shifting. You guys included several articles about how countries like China and Russia are increasingly conducting trade in their own currencies,
Mm-hmm.
or even using gold as a way to settle transactions.
So they're basically saying, hey, we don't necessarily need the US dollar as much anymore.
Right. They're trying to reduce their reliance on the dollar and kind of hedge their bets, so to speak.
And is this like a widespread thing? Are other countries doing the same?
It's definitely gaining traction. We're even seeing central banks around the world. Those institutions that manage a country's monetary reserves, they're diversifying their holdings, holding less U.S. dollars and more gold.
Wow. Okay, so maybe the dollar's reign isn't as solid as it used to be. But how does all of this connect to the whole US debt crisis and inflation that everyone's talking about?
That's where things get even more complex, and where these materials you've gathered really paint a more detailed picture. You see, the U.S. has this massive national debt, over 100% of its GDP, as one of the papers you sent pointed out. And that debt keeps growing.
Yeah, and it's not just some abstract number, right? It feels like everyone's feeling the effects of that debt with inflation going up. I mean, everything's getting more expensive, groceries, gas, you name it.
Absolutely. And to understand the severity of the situation, Groman highlights a really concerning statistic. He says that back in August of this year, the U.S. government's true interest expense was a staggering 150% of its receipts.
Wait a minute, true interest expense, what does that even mean?
So he's not just talking about the interest payments on the national debt itself. He's also factoring in massive entitlement programs like Social Security and Medicare, which are essentially these huge long-term obligations that the government has to account for.
So he's basically saying they're spending way more on interest payments and these programs than they're actually taking in.
Exactly. They're spending way more than they're making. And to cover that gap, they have to borrow even more money, which of course just adds to the debt and fuels more inflation. It's a vicious cycle.
So it sounds like the US government is in a really precarious position. And what about the Federal Reserve? They're supposed to be the ones in charge of keeping inflation under control, right?
They are. But they have an incredibly difficult job at the moment. One of the articles you sent in argues that the Fed's recent actions, like those interest rate cuts we've been seeing, are actually driven less by the actual health of the economy and more by this desperate need to keep those interest payments on the national debt manageable.
So it's like they're damned if they do and damned if they don't. If they raise rates to fight inflation, it could trigger a debt crisis. But if they keep rates low, inflation could spiral even further out of control.
Right. It's a real catch-22. And as you can imagine, this creates a tremendous amount of uncertainty for investors, businesses, really anyone trying to plan for the future.
Absolutely. And speaking of the future, we can't ignore the elephant in the room, the election. How do the economic proposals of the two main candidates, Trump and Harris, fit into all of this? I mean, could their policies make things better or worse?
That's the million-dollar question, isn't it? And Gromen spends quite a bit of time analyzing both candidates' proposals and their potential impact. It's fascinating stuff.
I bet. So let's get into it. You've got all their key proposals highlighted there, right?
I do, and I think it'll be really helpful for our listener to compare and contrast their approaches, especially considering all this stuff we've been talking about with the dollar-centric system and the debt crisis and all that. All right, so let's start with Trump. One of his main proposals is a big increase in oil drilling here in the U.S.
Okay, more American oil.
Right. The idea is that it would lower energy prices for everyone, businesses too, of course, and would boost U.S. industry, bring back jobs, that kind of thing.
Makes sense on the surface, but are there any, downsides or unintended consequences that Gromen talks about?
Yeah, there are a couple of things he points out. First off, increasing oil production, it takes time. It's not like flipping a switch, right? So it wouldn't be a quick fix for those high energy prices we've been seeing.
Yeah, that's true.
And secondly, this move could actually cause some friction with other countries, especially those that are trying to, move away from relying on the U.S. dollar so much and lessen their dependence on U.S. energy.
Yeah, it could kind of look like the U.S. trying to flex its muscles on the global energy market again, right?
Exactly. So, yeah, potentially a win for the U.S. economy in the short term, but it could stir up some geopolitical drama and maybe even undermine that shift away from the dollar that we were just talking about.
Interesting. Okay, so what about Harris? What's her take on the whole inflation thing?
Her approach is really focused on what she calls corporate greed.
Okay.
One of her big proposals is this anti-price gouging legislation. It's meant to basically prevent companies from jacking up prices too much, especially during times of, crisis or whatever.
I mean, I can see how that would be popular with voters, right? Everyone's feeling the pinch of these higher prices.
Oh, absolutely. But Gromen raises some concerns about this approach, too.
Like what?
Well, he argues that while it might sound good, price controls often end up causing shortages and distorting the market.
How so?
Well, if companies aren't allowed to adjust their prices based on supply and demand, they might just stop producing or selling certain goods altogether.
Ah, I see.
And that leads to scarcity, maybe even a black market popping up.
So it's like it could seem like a solution in the short term, but actually make things worse down the road.
That's his worry, yeah. It shows how tough it is to strike that balance, trying to address those immediate problems without causing even bigger ones down the line.
Yeah, for sure. It's a tough situation all around. So we've talked about the dollar, we've talked about inflation, the debt crisis, the election. Now, what about the markets? How does all of this affect, regular investors?
Yeah, that's a big one. And actually, Gromen has some pretty interesting insights about what all these things could mean for the markets.
Okay, let's hear it. What's he predicting?
Well, he starts by saying that he believes long-term U.S. Treasury bonds, those with maturities of 10 years or more.
Okay.
He thinks they're way mispriced right now.
Mispriced? You mean like they're not worth what people are paying for them?
Basically, yeah. And he thinks their yields are likely to rise pretty significantly in the near future.
Hold on. Now, when you say yields go up, you mean prices go down, right? For bonds, I mean.
Yeah, exactly. They move in opposite directions.
Okay. Just wanted to make sure I was following.
Yeah.
So why does he think that's going to happen with these bonds?
His reasoning goes back to that debt crisis we were talking about. As the government has to issue more and more bonds to pay for all its spending, the increased supply pushes prices down and yields up. Just basic supply and demand.
So maybe not the best time to be buying up long-term bonds?
He doesn't seem to think so, no.
Fair enough. What about gold? I mean, that's usually seen as a safe haven, right? Does he think it will hold up okay in this environment?
You know what? He's actually quite bullish on both gold and Bitcoin.
Really?
Yeah, which might seem counterintuitive to some people. But he makes a good point. He argues that the government's need for those negative real interest rates,
That.
where rates are lower than inflation,
Okay.
well, that creates a really good environment for assets like gold and Bitcoin to perform well.
Can you explain that a little more? I mean, why would negative real interest rates be good for gold?
Think about it this way. When real interest rates are negative, holding on to cash or regular bonds actually makes you lose purchasing power because inflation is eating away at your returns.
Right.
So people naturally start looking for other places to store their wealth that will hold their value better. Historically, gold has been that go-to asset. And Bitcoin, some people see it as a kind of digital version of gold, which is why Gromen lumps those two together.
Yeah, that actually makes a lot of sense, especially with what we were talking about earlier with central banks diversifying their reserves and stockpiling gold.
Right. It definitely seems to support his view. And here's where it gets even more interesting. Gromen actually believes the U.S. stock market will probably continue going up, at least in dollar terms.
Wait, so even with everything we've been talking about, the dollar potentially weakening, inflation, all that.
Yeah, even with all that, he thinks it will probably keep rising in dollar terms, but might struggle to keep up with gold.
So the stock market goes up, but gold goes up even more.
But that's the idea, yeah.
I mean, I get that gold's a safe haven and all, but why would the stock market keep going up if things are as shaky as they seem?
Well, this is where Gromen gets a little controversial. He claims that the U.S. stock market has basically become a matter of national security.
Whoa, national security. How
Yeah.
so?
Well, think about it. If the stock market tanks, the government loses a ton of tax revenue.
Hmm?
Capital gains taxes, corporate profits, all that dries up.
Right.
And that would obviously make that whole fiscal crisis we talked about even worse. The government needs a healthy stock market to, keep the money flowing and fund all its operations.
So it's like the government needs the market to go up, so they'll do whatever it takes to make sure it does, even if it means like sacrificing the long-term health of the economy.
That's pretty much his argument, yeah.
Wow, okay. So if that's the case, are there any particular areas of the market that he thinks investors should be focusing on? Any specific sectors or industries?
He's super bullish on U.S. industrial stocks, especially companies involved in things like electrical infrastructure. He sees a lot of potential there, with the government pushing to bring manufacturing back to the U.S. and investing in all these big infrastructure projects.
So it's basically a bet on American manufacturing making a comeback, and I guess a bet on the whole move towards renewable energy and all that, which, if we're being honest, seems like a priority for both candidates anyway, based on their proposals.
Exactly. But of course, it's also a bet on the government actually being able to pull all of this off, which is, something investors will have to weigh carefully.
For sure. Wow, we've covered a lot of ground here. The dollar, inflation, the debt crisis, the election, the markets. It's a lot to take in. But it's pretty amazing to see how all these pieces connect together.
I know, right? It really shows how everything's interconnected in the global economy. You can't just look at things in isolation. What happens in one area can ripple out and affect everything else.
Right, and that's why it's so important for people to understand all this stuff. It's not just about understanding the big picture. It's about understanding how these big forces could impact their own lives, their own finances.
Totally agree. And with that in mind, maybe it's time to shift gears a bit and talk about some practical takeaways for our listener. Some things they can actually do with all this information.
So we've talked about all this big picture stuff, global economics, markets moving. But what does it all mean for the average person? What can our listener actually do with all this information?
Yeah, I mean, it can definitely feel kind of overwhelming when you start digging into all these complex economic forces, right?
Right.
But I think that's where a deep dive like this can be really valuable. It's not about having all the answers. Nobody does, really. But it's about starting to understand those key questions to ask. Understanding what factors are at play so you can make smarter decisions with your own finances.
Okay, so how do we make this practical? What are some takeaways for our listener based on everything we've talked about?
Well, I think one of the most important things is diversification. You know that old saying, don't put all your eggs in one basket?
Right.
That's especially true in times like these when things are so uncertain. So, think about spreading your savings and investments across different asset classes, not just the usual stocks and bonds, but maybe look into things that tend to do well when the dollar is weakening or inflation is high, like gold or real estate, for example.
So don't be afraid to branch out a little, explore different options.
Exactly. And it's not just about what you invest in, it's also about how you manage your spending. If inflation's going to stick around, it becomes even more important to be really mindful of your budget. Look for ways to cut back or even find ways to boost your income.
Yeah, that's always good advice, no matter what the economy's doing, right? Live within
Mhm.
your means, all that.
For sure. And another thing that's super important, staying informed. I mean, we've only scratched the surface here, and things change so fast in the economic world.
Yeah, constantly.
So, make a habit of following financial news. Listen podcasts like this one. Maybe even talk to a financial advisor if you feel like you need some personalized guidance.
Knowledge is power, right? The more you understand, the better you can navigate whatever challenges come your way, and maybe even spot some opportunities.
Exactly. And just remember, it's a marathon, not a sprint. Be patient, stay informed, and make decisions that are right for you and your financial goals.
Couldn't have said it better myself. So, as we wrap up this deep dive into the wild world of U.S. finances and the global economy, any final thoughts for our listeners out there? What's that one big takeaway you want them to walk away with?
I guess what I'd say is this. We're at a really interesting point in history. The choices we make in the coming months, governments, businesses, individuals, everyone, are going to have a huge impact on what the future looks like. So don't be afraid to question things, challenge assumptions, think critically about how you can position yourself for success in this ever-changing world.
Love that. Be proactive. Take control of your future. Don't just let the waves toss you around, right? Be the captain of your own ship. Thanks for diving in with us today. Until next time, happy navigating.